This week, we are talking monthly trade data and investment opportunities for cow-calf operators. Welcome to the weekly Livestock Market Update on Brownfield. I'm your host, Meghan Grebner. With us this week is livestock economist Kenny Burdine with the University of Kentucky. Kenny, great to see you.
You too. Hello, Megan.
Welcome to meteorological fall. We're not to actually in fall yet, but we are on the way to cooler temperatures and more glorious weather.
I'll be ready for that.
All right, we're going to get into some of the trade data. We're going to talk a little risk management and investment opportunities coming up. But first, let's recap another very interesting week in the markets.
There's always been a lot to talk about. Seemed like all year since I started doing this, Megan. So we'll just kind of start at the top and go down. But live cattle trade was slow to develop this week, and I want to start with that. So I'm gonna share a price from today's report, but just there's kind of an asterisk by that if I can. So from today's report, which goes through Thursday, that 5 market average fed steer price was about $237, which would be off about $6 from last week. But again, we were very slow to trade, so there's a bit of an asterisk around that. August live cattle futures gained $3 on the week, settled at 233.25. We were just talking about this. A sharp movement down today, Friday, and still end up higher for the week. Choice box beef was up $15 on the week. This is encouraging because we'd had several weeks there that was pulling back, but up $15 on the week, coming in at $378.84. And then August feeder cattle futures were up $4.82 on the week, closing at $3.39. And like Megan, they were down. They were down the limit today, 9.25, I think it was, and still closed higher on the week. So that speaks to how high they had been to be up after what we saw this week.
I want to pause for just a second before we get into the hog numbers. We've had a couple of weeks where this live in this cash business has been really slow to develop. Is it just a function of where the markets are in terms of prices right now, or are there other factors coming into play as well?
If I give you my best guess, which is all I can do, I think we're at some price levels that obviously, raise a lot of eyebrows and get a lot of attention. And I think especially this week and probably last week as well, although I wasn't as in tune because I wasn't doing the report last week. But, we've kind of had these bids and asks a little further apart. I think we're trying to figure out, what is this market? And, it looks like we're going to be lower this week, but I think it just took some time for folks to really say, okay, that's where we are. And I think in a market like this, that probably is kind of the norm in some sense, that we've kind of got to establish, where is this range we're going to trade in? And there obviously was more disagreement the last couple of weeks than there had been prior to that between the two parties.
There has definitely been some epic standoffs in the last few weeks when it comes to cash business.
Yeah, absolutely.
All right, let's finish up and take a look at what's been going on the hog side of things.
Sure, we'll do hogs. So national base hog carcass price virtually unchanged, 105.03 per hundredweight on the week. Pork cutout values were $1.59 higher, 117.81 today. August lean hog futures are up $1.38, closing today at 108.73.
It's really interesting watching. I pay attention to weekly export sales. China's kind of it's a great mystery every week whether they're going to show up in the purchasers list. This week we were there. The last month they haven't been. But the demand still seems to be for pork pretty high, regardless if that big buyer is in there or not.
We're still moving a lot of product. Now, granted, I guess we're moving a bit less than last year, but now we're moving a lot of product. This is especially true with beef, but also true with pork, right? Our biggest market's our domestic market. And we have had some strength in some areas on the pork side and the export. So yeah, that is a factor, but I think the fundamental strength is there. And that may be the take home message, honestly, about a lot of these prices is there's uncertainty, there's concern, but the fundamentals are strong and prices have been there.
All right, let's take a look at slaughter numbers for the week. Start off with cattle.
Virtually unchanged cattle slaughter was 536,000 head. That's the projection through tomorrow on the week. I think that's up 1,000 head from last week, which I'm going to call unchanged, but still running about 6.5% below last year to date. Hog slaughter up 1% from last week, 2.35 million head, and very much like it's been the last several times we've talked, running about 2.3% below year ago levels. So both are down, but obviously beef is down much more than hogs in terms of slaughter levels.
And this really isn't a surprise, one, knowing supply constraints, but then also I would assume price levels as well.
Both, if you think about the hogs, we knew the numbers were smaller. Of course, weights are higher, so we're offsetting some of that. It's not a surprise on cattle either. Last year's calf crop was a little bit smaller. So there's going to be fewer calves in general. They're going to be on feed this year, and of course, the driver, of course, is beef cow slaughter, right, which is down about 17% on the year. So that's a good portion of that 6.5% that we're back from 2024.
All right, monthly trade data. So what we're going to talk about today is not July's numbers. It's actually June's information. As you take a look at these figures, let's kind of run through and then we can talk about some stick out numbers, because I'm assuming mine's probably similar to yours.
Sure, we'll just talk through them, and honestly, it's not that different a story than what we would have had, had we were doing this if we were doing this a month ago after the May data came out, or 2 months ago after the April data came out. But high level, June beef exports were down 18% from last year, running about 8% lower through the first 6 months of the year, so down 8% year to date, down a fair amount, but given price levels and given price levels and production, that's not an alarming number. The number, of course, that always kind of gets our attention when we talk about this, Megan, imports, beef and veal imports up 28% month over month and running 33% higher year to date. A little less dramatic in terms of pork. Pork exports up 5% June over June, but actually down about 2.4% through the first 6 months. And then imports were down on the pork side 6% for the month and about 6% year to date 2025 versus 2024. So similar there in terms of the change month over month versus the change, through the first 6 months of this year versus last year.
One of the things we talk about in real time is obviously the beef imports, specifically thinking about Brazil. So next month, we're going to talk about July, then we'll talk about August in October. So we won't see any potential impacts from this tariff situation because those tariffs on Brazilian beef went into place. But how does this, whether it's in real time or report form, impact thinking about our ground beef consumption and that trim that we have had to rely on imports on to meet consumer demand?
So Brazil is a significant source of imports, and that's a trim import market for us, like you said. For some perspective, now we've got 6 months worth of trade data, but imports from Brazil have actually more than doubled from last year. So for some perspective on volume, a huge increase. I actually think you and Josh talked about this some last week, and I think it's an important point that, they're one of the countries that are going to be very impacted by tariff put in place at this point. Now, we're really 2 months away from having trade data that would capture the month of August, which we just started, so it doesn't show up yet, but it matters. That's a significant market. And, we've talked a lot about that demand for trim, whether it be our ground beef market, our blend market, given how much fat is in our trim right now. But it also plays into this cull cow market, right? One of the reasons why cull cow price has been so strong is it's been trying to pull more of those cull cows to the market for that ground beef market. And honestly, this probably is going to lead to, lower imports from Brazil, and it may actually bump up those already strong cull cow prices.
So that means we may not see retention or growth on the beef herd as we're battling, and the price isn't giving us a signal to grow or to hold back.
I think that's going to be the key. I mean, I hate to throw out prices because your viewers are obviously all over the country. But, for example, an average dressed boning cow in Kentucky has been about $1.80 a pound, So whatever that number is in your state, kind of put that in the back of your mind. But, that's a heck of a price, right? And it's not been enough to entice increased culling yet. So I think what happens between now and the end of the year will be key. We always cull more cows in the back end of the year, right? We tend to calve in the spring. We tend to wean calves in the fall. So we tend to make our culling decisions when we wean those calves in the fall. So fall is going to matter. There's no doubt cow slaughter is going to be down a whole lot in 2025. It's just a question of how much. So I wouldn't be surprised to see slaughter pace pick up a little bit for the balance of the year, but I don't think it moves the needle a great deal in terms of beef cow inventory going into next year.
And I know the conversation around imports from beef is very incendiary. Like you're either, there's no in between there, right? Like you're either really not happy about it or you're fine with it. Thinking about it in terms, though, of that trim market, Kenny, where are other options if we're going to continue to put ground beef product or make a ground beef product available that isn't $17 a pound?
Yeah. Well, we don't have a ton of other options, right? We've talked about the cull cow market, but if we do pull cattle, if we do pull some of those cull cows through, then the effect of that is an even smaller cow herd going forward, right? Which just kind of amplifies this very signal that we're in. The import market's there. Short of that, we start talking about, changing production systems. We start talking about, do we do something different with some of that fat? We've talked about some of that on the show here in prior weeks. So it would be a pretty significant change if we didn't do things the way they do in terms of bringing in a lot of this trim.
All right. Plenty for us to talk about and look forward to for the rest of 2025 and into 2026.
Absolutely.
All right. You recently had an article in Cattle Market Notes Weekly, and those who aren't familiar, it's a newsletter that Kenny, Josh, who's on this show, and then James Mitchell from the University of Arkansas publish. But your article focused on investment opportunities for cow-calf operators. There's some great takeaways for producers and some things that we should think about moving forward.
I appreciate you asking about that. I like to write. I thought it was a neat little story to put together. So for a little bit of background on it, you kind of go back and think about that 2014, 15, 16 time period. And I think a lot of folks expanded during that time period. A lot of them paid a lot of money for breeding stock and probably looked back a couple years later and said, I wish I hadn't done that. So really the gist of the article was, what are some ways that I can invest in a cow herd outside of expanding? And I tried to be clear that there are absolutely some folks that need to expand their cow herd. So that is absolutely on the table. But I just want to make the point that if you're someone who doesn't think that makes sense for you, and I mean, I'm in a state, you and I both are for that matter, where land constraints are real, right? What land is available is very expensive.
It is not cheap for a girl trying to bring her cows down from Illinois. I'm telling you that right now.
Breeding stock is expensive. So there's a lot of folks that probably don't want to grow their cow herds right now. But on the same note, this market in 2025, and I would argue last year's market and almost definitely 2026, are incredible opportunities. And by that, I mean a whole nother world in terms of revenue at the cow-calf level that a cow-calf operator can do something with. The goals being that you want to look back in 5 years and say, you know what, I used that opportunity wisely, not look back and say, man, I wish I hadn't made that decision. So just kind of threw out some ideas and just talked about those briefly. But one of them was genetics, right? And that's kind of a go-to in a lot of cases. But if you can make investments to improve the genetics of your cow herd, you tend to think about bulls, but it doesn't have to be bulls, right? But the idea being that, can I produce bigger calves? Can I produce more valuable calves at roughly the same cost per head? Then that makes me more profitable in the long run. And I think for a lot of things, you want to think about, okay, what can I do today that either lowers my cost structure or increases my efficiency over the next several years? So genetics is kind of the first one that I kind of threw out as an idea.
There's genetics, but then there are some other things too that are tangible in terms of the property and where we're looking at keeping animals.
Absolutely. And the next one I kind of thought about was, well, facilities. And this can take a lot of different turns, but it's pretty common that, we can add value to calves, through selling steers instead of bulls, by selling wean calves. We can talk about implants, and a lot of those things require good facilities. And I think probably the biggest constraint to some people selling value added cattle is not having those facilities. So maybe you look at this opportunity as a chance to upgrade your facilities, get in a better position to sell some of those higher value added type calves. And that should pay dividends down the road as well. So that, again, that allows a producer to make investments that put them in a better position to add value down the road.
What about feeding or grazing?
So there's probably some bias on my part that comes out here, but I'm a believer in grazing, and I'll throw the caveat again that there's our states are all different, but your biggest cost for most cow calf operations is winter feed. And, in most cases, there's exceptions, but in most cases, I think the average producer could probably lower their cost per head if they could have improved grazing systems, rotationally graze, and limit their dependence on stored feed during the winter. So watering systems, setting up the ability to run cross fencing, paddocks, things like that to more efficiently use your forage base, I think in most cases can lower your cost structure, which will be beneficial, down the road when these prices of these calves are not as high as they are right now.
I would assume even making some of those investments also probably ties into your facilities, right? Making sure storage facilities are also up to quality and you're able to preserve some things as well.
You can almost go anywhere with that. You can think about is it handling, is it feed storage, is it transportation? There's so many things you can do, but the message to me, I guess, or for me, I suppose, is that we've got an opportunity here that we don't want to let get by. And when you look back 5 years from now, what do you think will have been what you really appreciate you were able to do with the 2024, 2025, and 2026 calf market? Because I think that's going to set us up for the next probably 10 years. And thinking about that, Megan, I guess the last thing I'll mention is there's some basic, I'm going to call strategic financial decisions you can think about. And one way to lower a cost structure long run is pay down some debt. And it seems like a no-brainer, but most farms have a debt load of some type, whether that be land, equipment, operating line, whatever. And strategically thinking about, okay, do I just want to target some of this influx of income the next couple of years to pay down some of that debt, maybe allows me to restructure it somewhat and to lower my cost structure is beneficial. The other point that I like to make, interest rates are so different now than they were a few years ago. And I think interest rates were so low for so long that I think we kind of lost that understanding of how important working capital can be, because money was cheap, right? And now, if I've got some working capital, if I've got some cash reserves that I can use to fund some of my, typical purchases so that I'm not dipping into a line of credit at a much higher rate right now, there's a cost savings on that. And similarly, even if I've just got it sitting there in some sort of, relatively risk-free investment, like a money market or something, right? It's got a better return, than it certainly did a while back. And I think there's value also in having that, because sometimes that cash reserves is what puts you in position to make purchases, to do things when opportunities present themselves. That might be equipment. That might be, the parcel of land that joins you've always wanted, but having access to some cash reserves oftentimes makes that kind of stuff easier to do.
These all seem like such great practical business discussions to make sure you're considering as you're looking ahead for a cattle cycle that's probably going to change dramatically in the next few years.
I think it's hard to say, how long the good times are going to last, Megan. If I can use that cliche, I think everybody, or most people, I should say, including myself, think that we're going to get a much longer run of strong prices this cycle than we did back in 14 and 15. But if we've learned anything, it's about the uncertainty. And I think that the key message here is take advantage of this market, whatever that means for you, because there's an opportunity there to get yourself in position for the next several years.
Before I let you go this week, supply and demand numbers are out next week. What are you watching for in terms of what USDA is information USDA is releasing?
There won't be any change on imports from Mexico on the live cattle side, so that's going to be largely the same, right? They're gonna assume going forward that stays in place. I don't look for major changes from last month. I'll be looking at that beef production level. We've been watching. We just talked, in fact, about how much how much beef cattle slaughter is down this year versus last year. A lot of that coming from cows. So, you kind of combine that with what weights are doing, and that'll tell something about beef production. But beef production is going to be lower in 2025. It's a question of how much lower. And I think just as important, looking at the production of those three main meats that we eat kind of in conjunction with one another, right? Because I think there's going to be a little bit different story, I think, in all three. And they do compete for space on that supper plate, and they compete for dollars in that household budget. And I think watching those two things to me is going to be key.
Kenny, it's great to see you.
You too. Thanks.
So our weekly livestock market update delivered your email box every Saturday. Go to brownfieldagnews.com. You can also submit questions and comments. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner for Brownfield.